The big numbers that came in from India's largest oil and gas giant, and that's Reliance Industries, in line with street estimates. These numbers, of course, are for the fourth quarter, and we're comparing them on a year-on-year basis. Profit after tax at 4236 crore rupees is down 21%. Sales at 85,182 crore rupees is up 17%. GRMs at $7.6 per barrel, compared with the $9.2 per barrel the same time last year. Reliance Industries has declared a dividend of 8.5 rupees per share. Outstanding debt at almost 70,000 crore rupees. To quote Mukesh Ambani out of the media release that came in on the numbers, "We have created a strong foundation for the future growth and are investing in our core upstream and petrochemical businesses in India. Response to our organized retail business has been very encouraging, and we continue to expand our footprint by building more stores across the verticals, formats and geographies. We remain committed towards providing world-class high-speed wireless data services through the launch of our broadband access business." That's Mukesh Ambani talking on Reliance's Q4 numbers. Let's go straight across to Ajay Sharma, who joins us with more perspective and more details and is here to do some more number crunching. Ajay, help us understand a 21% dip in profit. Obviously, everything has been on a downturn, especially refining margins. How do you read those numbers? And $7.6 per barrel isn't as bad as was being expected, am I right?
Well, that's correct. 21% fall in the net profit is compared to 19% what ET Now poll suggested. But the street is taking it as in line with estimates, and the analysts say that the stock may not see any wild reaction on the stock market, because this is the kind of number street was already working with. $7.6 a barrel at refining margins, though it's lower on a sequential and on a yearly basis, but they have matched the Singapore complex at $7.6 a barrel. So this is a bit of a green shoot coming in. But as you said, all the three segments, be it refining, be it petchem or oil and gas, were actually on the weaker footing. Refining at 2.2% was flat sequentially and lower on a yearly basis. Petchem was lower on sequential and yearly basis. Same was the case with oil and gas, with gas volumes actually dipping to all-time low in the fourth quarter. The margins have come at 36% versus 45 on a sequential basis, or even 38 on a yearly basis. So it looks like all the engines of growth are actually a bit soft right now as far as Reliance is concerned. All eyes are actually now on the oil and gas segment of the business, because that's the biggest contributor of profits. How the company manages to increase production in coming quarters is what everybody on the street would like to know.
Help us also understand very quickly, before I let you go, help us understand what does Reliance have to say with that fall in output as far as KG-D6 basin is concerned. I know it's the center of all controversy and its standoff with the government of India, but is Reliance specifically talking about this in their fourth quarter numbers?
Well, Supriya, Reliance's stand is clear that they continue to invest in their upstream and downstream operations, though they have categorically not stated on the number gas volumes, so I would not be able to share that part with you. But taking into account that the recent news flow has been, analysts believe that it would take a while before any meaningful increase in the gas volumes may actually happen, getting what we are hearing from the management and from the oil ministry side.
We're going to change focus and talk about the analysts' view on Reliance Industries Q4 numbers. A stable quarter, numbers in line with street estimates. But what does the analyst community have to say on that? We begin with Deven Choksi.
Singapore GRM has remained at around $7.6 per barrel, and Reliance's GRM in this particular quarter is exactly matching that amount. So it has somewhat, I think, surprised us, as I would call it, in the initial reaction. Maybe we'll go down into details and probably, I think, work out on those numbers a little bit more. But it is basically, I think, more reassuring that if they have been managed to, or they have managed to, I think, record this particular number even in such a volatile quarter, which means that I think the company has found out ways to beat the kind of a pressure on the fuels, I think, which were giving them lower margins.
Upside is fairly limited. It all boils down to what kind of gas production they will get. If they get any kind of solution for that gas problem, I think if there is any windfall gain from that front, so those things can change the equation. But otherwise, on the face of it, it is appearing that 750, 760 is a sort of a cap, and until and unless the buyback comes and gives the support, the stock is heading below 700.